it's car insurance renewal time, and your premium went up, but you didn't make any claims. Actually, you didn't do anything. So why do you suddenly have to pay more for the same thing? Car insurance price increases are frustrating, obviously. It's even worse if your insurance goes up after a claims-free year. But claims are just one of many, many factors that go into this calculation. In this video, we're going to go in depth. We'll look at data car insurance providers use to calculate the rate you pay for your insurance. Now, 2 quick things before we get started. 1. These factors don't always result in price increases. They often result in decreases too. It all depends. 2. Not every insurer uses the same factors or gives those factors the same importance. They can also change their calculations from year to year. That could change your insurance cost without you doing anything. Since insurance is regulated provincially in Canada, things are also very different between provinces. But in this video, you'll get a general idea of how insurance companies think when they're calculating prices. Let's start with the obvious one. Your vehicle. Obviously, the car you insure affects the amount you pay. The big thing here is the vehicle's repair or replacement cost. Since your policy will pay to repair or replace your vehicle, a more expensive vehicle will cost more to insure. And that goes beyond the sticker price. Common car models, even expensive ones, are often cheaper to repair because replacement parts are easily available and don't require special orders or specialist mechanics. And as vehicles get more and more advanced, repair costs go up. All those cameras and sensors in the new vehicle can turn a little fender bender into a multi-$1,000 repair job. Average repair costs change from year to year, which causes changes in your car insurance costs. If you're buying a new car, you can use actual insurance rating information to estimate the relative cost of insuring different models. The Insurance Bureau of Canada publishes vehicle rankings based on claims data for most makes and models. We've put a link to these rankings in the description below. The next thing that affects your insurance price is how you use your vehicle. You probably know this part. When you buy car insurance, they ask you how you use your car for pleasure, business, or commuting. How far is the commute? More time spent on the roads means a greater chance of being involved in an accident. For that reason, daily commuting costs more to insure than the occasional weekend use. Speaking of which, where you live and where you park your car affects insurance rates too. For example, living in an area with a high vehicle theft rate means more expensive theft coverage. Many insurance companies look at theft data by neighborhood or even postal code. Moving even a few blocks down the street can make a difference in the price of car insurance. There are other location-based factors too. People in rural areas pay less on average than people in cities. More traffic, more vehicle theft, and other factors make cities a higher risk. Weather matters too. Some places get hailstorms, while others are prone to flooding. Insurance companies weigh all sorts of data in deciding what price to charge. As these things change from year to year, your insurance price could also change. Who drives the car? That's a big factor that insurance providers want to know. A 16-year-old with little driving experience is more likely to get into an accident than someone with a 35-year record of safe driving. Anyone with a bunch of convictions on their record will pay more too. If multiple drivers are listed on the policy, all of their details will be part of calculating the price. Age and driving history are major factors, but there are other personal details that might affect someone's car insurance. For example, some insurers use credit scores as part of their application process, but this is often restricted. In Ontario, for example, car insurers aren't allowed to use credit scores at all. Some providers also use a person's gender as a rating factor. For example, in some places, women pay 5 to 15% less than men for car insurance. Many providers have specific discounts based on personal characteristics. Discounts for seniors or retirees are common, for example. Some providers give discounts to people of certain professions too, like healthcare workers or teachers. Now, the big one, claims. Claims are the biggest factor in the price of insurance. But, and this is important, it's not just the claims you make or don't make that affect your price. Insurance works by spreading the risk amongst many people. Imagine this, you and every other customer of your insurance company pay insurance premiums. These premiums go into a pool. When you or any other customer make a claim, the settlement comes out of that pool. The role of the insurance company is to manage the pool, making sure it's never too empty or too full. The pool needs enough money in it to cover all the claim settlements. There also needs to be enough left over for the insurer to cover their operating costs. They'll also set aside a reserve fund for emergencies and try to make some profit. At the same time, they don't want too much left over. That could mean they aren't offering a competitive price and costing themselves customers. To facilitate all of this, insurers use all the data at their disposal to predict future claims and adjust the size of the pool to cover those costs. When this pool gets bigger, it needs more money to fill it, and the increase will be spread amongst all the customers. If it gets smaller, premiums go down. It's one of the main reasons that insurance increases when you haven't made a claim yourself. When the total cost of claims goes up, a modest increase to everyone's premiums keeps insurance relatively affordable. Usually, people who did make claims will see a bigger increase than people who didn't. There are many reasons, but mainly it's that they have lost any claims-free or accident-free discounts they had. So, now that we've covered the basics of where car insurance premiums come from, what can you do about it? This may be obvious, but it is worth mentioning. The coverage you choose when you buy your car insurance will affect the price. More coverage costs more. Less coverage costs less. If you decline optional coverages, your costs will go down. If you don't have theft coverage, theft risks wouldn't be included in your insurance costs. But of course, if your car is stolen, you'd have to pay for a new one yourself. If you don't want to sacrifice coverage, you can also choose a higher deductible. A deductible is the amount you pay when you make a claim before your insurer pays the rest. So, a high deductible means you'll pay more when you do submit a claim, but your premiums will lower. There are many ways to save money on car insurance, from coverage adjustments to bundling home and car insurance together. Most providers offer a range of discounts too, for everything from winter tires to anti-theft systems. Make sure you're getting all the discounts you are eligible for. We've got a whole video about saving money, which you can find here. That's all for this video. To stay up to date with our latest car insurance tips, make sure to click the subscribe button below. Thank you for watching, and I hope you found this helpful. Huh.
Sorry.
Shut up!
I didn't think this was a series.
Were we listening? Absolutely nothing.